Look, folks, there's a point in your financial life where making more money doesn't actually make things better. In fact, if you're not careful, it quietly makes things worse. And I'm not talking about people struggling to get by. I'm talking about high earners, business owners, executives, people making $500,000, $700,000, even $1 million a year. Because I can tell you, after sitting across the table from hundreds of these families, there's a very specific moment where things should feel like they're working, but they don't. Let's take a simple example. Let's say you're earning $750,000 a year. On paper, that's success. That's the number people chase. That's the number that 10 years ago you thought would solve everything. But here's what actually happens. Before that money even hits your life, federal taxes, state taxes, payroll taxes, you're losing somewhere between 35% and 45% of it. So your $750,000 is now closer to $425,000, maybe $450,000. Still great income, but we're already playing a different game than you thought. Because the problem isn't what you make, it's what actually flows through your life. Now let's talk about what happens next. You upgrade your life. Not in a reckless way, in a way that feels completely justified. Better house, because guess what? You can afford it. Better cars, because you've earned it. Better vacations, because why not? None of those decisions are wrong, but here's where it gets dangerous. They're not one-time decisions. They're permanent upgrades to your monthly burn rate. So now instead of spending $10,000 a month, you're spending $25,000. $30,000, sometimes $40,000. And here's the part nobody says out loud. You don't feel rich because your income went up, but your obligations went up with it. That second home, it's not an asset. It's a very expensive subscription if you think about it. At this level, wealth isn't built on income, it's built on margin. What's left over after everything else. Because if you're making $750,000 and spending $600,000, you're not building wealth. You're maintaining a lifestyle. And lifestyle is fragile. It only works as long as everything goes right. Now let's layer in the part that really accelerates the problem. That's right, taxes. Most high earners don't have a tax problem. They have a lack of tax strategy problem. And there's a big difference. Filing taxes is reporting your history. Tax planning is shaping the future. And most people only have the first one. So what happens? They overpay, not because they're doing anything wrong, but because no one is proactively coordinating the decisions. When to take income, how to structure the business, what buckets to use for investing. We've seen this cost people tens of thousands of dollars, sometimes even hundreds of thousands every single year. Here's the biggest issue we see. Everything is fragmented. You've got a CPA, an investment advisor, maybe an attorney, but they're not actually working together. So every decision gets made in isolation. Your CPA minimizes taxes this year. Your advisor builds an investment portfolio, but no one is stepping back and asking, how does this all fit together? It's like having a personal trainer, a nutritionist, and a doctor who have never met each other. Now, let's talk about risk, because most high earners are far more exposed than they realize. Your income is tied to your business or your company. Your investments are often tied to that same source. So your financial life is dependent on one thing going right. Now, that's not diversification, folks, that's concentration. So what actually fixes this problem? It's not a better investment. It's not a new product. It's not chasing higher returns. It's coordination, a system where cash flow is intentional. Taxes are planned proactively, and investments align with your goals. More importantly, risk is managed properly. Everything working together. Because here's the truth. At a certain level, making more money isn't the answer. Building a better system is. And if things feel off, even though you're doing well, it's probably not you, it's the structure around you. Follow us if you want to see how high performers actually structure their financial lives, not just how they invest. That's all I got. See ya.